when you think about investment in infrastructure, how environmental factors and certainly governance factors play an important role, not because you have a ESG screen on investment necessarily, but it's part and parcel very much impact the return and the performance of an investment.
When you look at governance and sustainability, and even some of the environmental aspects of running a company, whether they're public or private, are a series of risk factors that we can all agree that we want to make investments in which the company's not polluting the environment excessively. We're not going to invest in a company that employs child labor. We're not going to invest in a company, whether the company's public or private, has poor financial returns, yet the CEO gets paid a $40 or $50 million pay package. Excessive CEO compensation. That's an example of poor corporate governance. Said another way, if you were to look at just two publicly traded companies, and we'll use the railroad sector, for example, railroads have been underfunded, challenged to meet some of their operational challenges. And from a safety and compliance perspective, many of the railroads have had to invest billions of dollars of capital into their companies just to meet safety and compliance and regulatory issues of operating a railroad in the United States. Conversely, one in particular, Norfolk Southern, in the last 10 years has cut their safety and compliance budget by 40%. They've reduced their headcount by 20%, and they've seen their incidence of hazardous chemical spills increase by 600% in the last 10 years. Short term, their stock price benefited from the cost cuts. But most recently, with not one but two chemical spills in Ohio, Norfolk Southern was directly responsible for those. As a result of their underinvestment of safety and compliance, now they're subject to multiple lawsuits from both individuals, class action, as well as a state lawsuit that's forthcoming, in which it'll take a multi-billion-dollar hit to the company, and that'll significantly increase their liability, hit the stock price, and create a longer-term issue for the company. Conversely, Kansas City Southern has taken a different route of spending more money on safety and compliance, adding headcount to accommodate transportation growth. And when you look at their incidence of hazardous chemical spills and security, it's actually been reduced in the last decade. So when I talk about environmental issues, think about Norfolk Southern chemical spills. You talk about social issues. My mother lives in Pittsburgh. That's within the plume of that Norfolk Southern chemical spill that's infiltrated the waterways of 6 different states. And we talk about governance. Think about the CEO who made a conscious decision to cut their safety and compliance budget, to cut their headcount budget, but yet he knew and saw a 600% increase of hazardous chemical spills. But yet every year in the last 10 years, he's awarded himself stock-based compensation increase as well as a pay increase. So ESG is not just something that's a nice to have or something that may be applicable that generates additional returns. Sustainability is about doing more with less. And actually, ESG leads to some interesting risk factors that helps to manage and mitigate investment loss, whether you're talking public or private market.